Jonathan was the manager of his father's Houston dental practice. Now he's in big trouble, facing up to 5 years in prison and a fine of up to $250,000. That's because this March of 2024, he pleaded guilty to employment tax violations that affected 51 of the clinic's employees. Let's see what went on. As a manager, Jonathan was tasked with accounting for and paying the clinic's employment taxes, including taxes withheld from its 51 employees' salaries. But during the first quarter of 2015, due to cash flow problems, he decided not to pay $544,272 taxes collected from the 51 clinic's employees. Instead, he paid other vendors or transferred funds to accounts of other entities he was involved in. This was a huge mistake with formidable consequences. Although Jonathan has agreed to pay $495,847 as part of his plea, he still faces jail time and the $250,000 fine. Why do you think that even if Jonathan is trying to rectify things, the punishment is so harsh? Well, that's because taxes withheld from the employees' salaries are the employees' money. The company only holds the money in trust until paid. Your employer takes out of each of your paychecks federal income tax that you take a credit for on your tax return, Social Security tax for your pension, and Medicare tax for your health insurance when you retire. After your company withholds tax from your paycheck, it has to pay this money to the IRS typically within a couple of days from the paycheck date. When Jonathan took the money from the employees' salaries and used it for other purposes, basically he committed theft. The IRS takes trust fund violations very seriously. They will go not only after the company, but also after the person that is responsible for collecting or paying income and employment taxes withheld, if this person willfully doesn't collect or pay them. Usually officers or owners have these payroll responsibilities, but even a mere employee of the business can be held accountable. Using available funds to pay other creditors when the business is unable to pay the employment taxes is an indication of willfulness, and Jonathan did exactly just that. And you can imagine that the nurses, doctors, and the other clinic personnel had no idea what was going on. Doesn't even cross your mind when working for a dental clinic, which should be very profitable, that they mismanage their cash, and instead of paying your taxes to the IRS, they use your money for their own purposes. Now, you might wonder if these 51 affected clinic employees lost the credits for this money withheld from their paychecks that were not paid to the government. Fortunately, they shouldn't have. Because the good news is that your employer's actions do not directly impact your eligibility for tax credits. If federal income tax was withheld from your paycheck that the employer didn't pay, you should still receive credit for that amount when filing your tax return. But you should make sure that your employer correctly reports your salary and your taxes withheld on your W-2 form. Because another situation that can occur is for the employer not to report the wages and taxes correctly, as we saw in our previous video about the construction company that committed a $2.8 million tax fraud. The employer might even give you a W-2, but this doesn't mean they also sent it to the Social Security Administration. You should always check that your employer is correctly withholding and properly reporting your wages and taxes. It is also a very good idea to always keep all your pay stubs. And another suggestion I have is to create an online account with the Social Security Administration. This way, every year you can check what was reported for you by your employer and that the correct wages are shown on your account. I will include a link in the description of this video to the Social Security Administration online account registration. And if you're a business owner, you have to be careful who you assign to take care of your payroll tax obligations. And you should always review and reconcile your financial statements, including the payroll tax activity, at least on a quarterly basis, if not monthly. If you're in need of a good CPA firm for your small business, contact us. That's it for today. If you liked this video, give it a thumbs up and subscribe to our channel for more tax stories and tax updates. Thank you for watching.